Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit, and my name is Alex Mathew. This show is geared towards getting you answers to all of your stock-related questions. Whether they are short-term, technical in nature, or long-term fundamental, we've got you covered. Now, today, of course, the big event that we've been tracking is the outcome of the latest meeting of the Monetary Policy Committee of the Reserve Bank of India. They voted 4-2 in favor of holding the policy rate unchanged, and also 4-2 in terms of the withdrawal of accommodation stance that they have maintained. There are a couple of conversations that emerge from the speech that relate to banks, and we'll talk about that in just a bit. For now, let's first take you through what's happening with the equity markets. You have the benchmark Nifty 50 that's trading with cuts of about 0.4%. It is just below the 24,200 mark at this juncture, and the broader markets are actually looking better. You have the mid-cap index that's gaining about 0.2% or thereabouts, and you have the small-cap index that's up about 0.4%. This, remember, is in a global context that's a little bit weak for risk assets. You've seen cuts overnight on Wall Street, and you have seen cuts in the Asia-Pacific region as well. So to that extent, the Indian equity markets are not doing too badly, to say the very least. Now, we are, of course, looking at a situation where looking at several indices that are trading in the red, but the Nifty Bank, interestingly, is holding on to green. It is trading up as much as 0.1%, but let's actually look at that sectoral breakup, and that should give you a perspective of what's doing what. In fact, it's only the banks that are doing reasonably well, in the pharma space that is up about 0.5% or thereabouts, 0.6% or thereabouts, and media that is up about 1%. Everything else more or less in the red. Let's focus in on two aspects of the speech by the Reserve Bank of India governor today that related to banks. The first has to do with the banks struggling to get retail deposits because, and this is being spoken about for quite a while now, a lot of investors choosing to move money out of deposits into other asset classes, including into equity. But the thing is that the RBI governor is saying that this could in fact pose a structural liquidity issue for banks going forward, and it's certainly something that needs to be fixed. Listen in.
It is observed that the alternative investment avenues are becoming more attractive to retail customers, and banks are facing challenges on the funding front, with bank deposits trailing loan growth. As a result, banks are taking greater recourse to short-term non-retail deposits and other instruments of liability to meet the incremental credit demand. This, as I have emphasized elsewhere, may potentially expose the banking system to structural liquidity issues. Banks may therefore focus more on mobilization of household financial savings through innovative products and service offerings, and by leveraging fully on their vast branch network.
All right. Now, what is the outcome of something like that? Because banks ultimately are going to have to attract customers to invest and to put money into deposits. We'll talk about that in just a bit. But there was another aspect as well that related to regulations that govern the loan-to-value ratio that is mandated when banks are lending. Now, this simply relates to collateral that is offered. So, for example, if you talk about a housing loan, the house itself is collateral. The loan is a fraction or a percentage of the overall value of the house. And there are regulations that govern how much lending can take place. Now, what happens is that banks offer top-up loans on top of things like housing loans as well as gold loans, and this has emerged to be a bit of a problem, according to the central bank governor, and here's what he said.
Banks and NBFCs have also been offering top-up loans on other collateralized loans like gold loans. It is noticed that the regulatory prescriptions relating to loan-to-value, that is LTV ratio, risk weights and monitoring of end use of funds are not being strictly adhered to by certain entities. I repeat, certain entities. Such practices may lead to loan funds being deployed in unproductive segments or for speculative purposes. Banks and NBFCs would therefore be well advised to review such practices and take necessary remedial action.
Now, of course, there's lots more beyond what I have highlighted in the speech, and there will be a press conference at 12 o'clock that will elucidate these points further. So I would encourage you to stay tuned for that. For now, let's introduce the guests that we have today that will answer all of your questions and speak about what I've just highlighted. We've got Lancelot Dicuna, who's the CIO of ValueX Wealth Connect, as well as Rajat Bose, who's a research analyst. Thank you so much to the both of you for taking the time, and good morning to you. Lancelot, I'm curious what you have to say about what banks can do to mobilize deposits or to get people to deposit. To me, the only solution is to increase the rate of deposits that is offered or the rate of interest rate that is offered, and that will result in a scrimping of net interest margins. And let's face it, a lot of banks have enjoyed elevated NIMs or net interest margins for quite a while. So why don't they bite the bullet and increase the rates and try to get more customers?
So I think, one is when the rates go up, banks try to also maintain the spread that they have. And so they have to lend at higher rates. Now, when you start lending at higher rates, there is always, you have to go down the value chain in terms of attracting higher risk assets. And that can result in a situation where your credit costs go up because you may have a larger amount of NPAs, etc. So I think given that background, banks are a little reluctant because on the lending side also there is pressure to lend at lower rates because good customers, given the liquidity that is available, let's say general liquidity available in the banking system, or even, interest rates, lower interest rate funds available to various good customers, it'll be difficult for banks to keep finding good customers borrowing at higher rates. So I think in that sense, banks are also constrained by the rates at which they have to lend out. And given that, they have to then look at trying to lower the cost of their funds. Otherwise, their net interest margins get squeezed, and that could result in further problems for them.
Okay. In that context, what would you say are the top banks that you prefer at this juncture?
So at this juncture, in terms of valuation, I would look at, maybe a Kotak Bank has a fairly good franchise for deposits, has reasonably large CASA ratio. State Bank of India has almost, 44% of its as CASA ratio is pretty good for State Bank of India. They're the widest network as far as gathering of deposits is concerned. So I think these two are in the space where, you can look at them expanding their franchise in the deposit space. And I think HDFC Bank is consciously making an effort to increase its deposit base because their, the credit deposit ratio was a little bit elevated in the last 2 quarters, and they've been looking at trying to bring down that credit ratio. So HDFC Bank also in the next 2-3 quarters will bring down that ratio, and that will be a fillip for the bank itself.
Okay, fair point. Let's jump into the questions, and quite a few already have come through. If you're tuning in right now, the number that you see at the bottom of your screen, that's where you send the questions to us. Rajat, sorry to keep you waiting. The first question to you, it's coming from Belgavi in Karnataka, and it's from Amul Biradar. He's asking about IOC, Indian Oil Corporation of India, which he's bought at levels of 180. The stock is currently trading at 170, so he's asking whether to hold on with the hope of recovering his buy price and also making a profit, or should he book the loss?
Regarding IOC, what I would say is that IOC is currently at 170. I mean, if it is almost on a several-year high, it has come down a bit from 180. So I would suggest him to continue holding on. And I really don't know what price he has bought. But then here the percentage of loss at the moment...
Rajat, he's bought at levels of 180.
Oh, 180. And in that case, if he is a short-term player, then the stop loss should be placed below 165. And there is a possibility that it may bounce back. And if it bounces back above 176, then 180 can also be reached. But if you are buying a stock near to the all-time high, then you will have to suffer for some time.
Yeah, that's a fair point. Jubilant Pharma is the next counter that we're talking about. And this is a question coming from Raghavan. And he's bought this as many as 3 years back. He's got 300 shares, but he's not told us what level he's bought it at. He's asking whether to hold it or dispose of it. On the fundamentals, stock trading at 850 or thereabouts, Lancelot, what's your view on this one?
So I think it's a hold. It is a continue to hold because, Jubilant Pharma has done well over the last 2-3 years in terms of its growth, both on the generic side. And you are seeing, significant growth prospects for pharma, Indian pharma, especially the pharma companies who are exporting to the US. They would see increased, business coming out of there and thereby improvement of margins as well. So I would say that it's worth holding on, and you will see the other pharma companies also benefit in this scenario.
Okay, fair point. We've got Tata Power, and I'm not really sure about the buy price. It sounds incredibly low, so I'm going to avoid mentioning that. And we've got D. Nageshwara Rao, who's bought, and he's wondering whether to hold on to this. Stock is currently trading at 422. What are the key levels to watch, Rajat, based on what you're seeing on the charts?
Based on the charts, 410 to about 407 could be a good support area. Below that, it will be 399. Point is that this stock is actually showing a distribution pattern over the last few months, starting May. And unless it takes out 460 to about 465, there will not be any breakout, and the bullish signal will come only when it takes out 460 decisive.
We've got a question on Bajaj Hindustan Sugar. I'm trying to pull up the share price and see what it's currently trading. Actually, if we can pull up the chart, guys, while we're speaking about this, it's not really doing anything much in trade today. And I'm wondering if you have a view on this, Lancelot, at all. And if not this, then another stock in the same space, because we've got Vaishnavi from Hyderabad who's bought 3,000 shares at 41 or thereabouts, and she's wondering what to do with this.
So I think my view is that, sugar is always a cyclical commodity, and, you have to buy when the prices or the cane prices are on the lower end. Because again, this, it's also a little bit of political issues regarding export of sugar being permitted, not permitted. These things happen from time to time. So given that, we just had a good run in the sugar stocks, I think it's probably at the higher end of its valuation. And so one should avoid buying at this time. But if you are in profit, you can look at booking profit and wait for the next cycle of correction.
Yeah, that's a fair point. It has, in fact, done incredibly well over the last year, as you've pointed out. Pawan has got the next question. He's got Canara Bank at levels of 121. He's got 3,000 shares, a large number, and the stock is currently trading below that buy price at 107 or thereabouts. Should he hold or should he sell? Rajat, what are the prospects for this counter?
Currently, Can Bank is actually tasting its 200-day exponential moving average. 200-day exponential moving average, as of today, it is standing at 109.55 as we talk. If it were to fall below 107, then I would say one should get out, because sometimes the 200-day is breached for the time being, but then bounces back again. But since it is tasting 200-day exponential moving average for the second time, barring that June 4 nosedive, there could be some institutional buying, because normally what we see is that whenever the 200-day exponential moving average is tested, institutions or big players come in to take some positions. If that happens, then it should move beyond 115 and show that there is some real buying. In that case, the investor can continue to hold. Otherwise, put a stop loss below 109.55 on closing price basis. If it goes below that, exit.
Okay, fair point. We've got Bandhan Bank to talk about next, and this is a question from Karthik. He's writing in from Tamil Nadu. I have asked him whether he's seeking a long-term fundamental view or a technical view, but he has bought at levels of 236. The stock is currently trading at very close to the 200 mark, and he's wondering whether to average his buy price at this stage. In the absence of a clarification, I'm going to come to you, Lancelot, on fundamental view. What would you say about this particular bank? And if you bought at levels of 236, not too far away from the current market price, it is lower though, having said that. Would you average at this point?
No, not yet, because like we had discussed earlier, in terms of the macroeconomic environment for banks becoming difficult, and Bandhan Bank is again focusing at the lower end of the stratosphere, because earlier they were predominantly into microfinance. So that segment of customers are going to find it more and more difficult in terms of repayment, and so since there is the outlook for on the lending as well as deposit side is looking difficult. Plus, with RBI trying to clamp down on misuse of funds, etc., it's going to be very challenging time for some of these banks over the next 12 months. So it's better to stay out. And in case they really come down and you see that the worst is behind, then one can look at adding on.
Yeah, okay, fair point. So watch out for the earnings, certainly, before you take a call. Lancelot and Rajat, we have to slip into a very quick break. Viewers, we'll be back on the other side to take more of your questions, so do stay tuned. Welcome back. You're watching Ask Profit, and we're in the midst of taking all of your questions. By the way, I hope we can play that. There you go. On the screen there, if you're tuning in for the first time, that's the number that you send your questions to us on. The first question we're taking on this side of the break is from Satish, and he's asking about Shakti Pumps. Can it be bought at the current level as a long-term portfolio stock? The stock is currently trading at 4,545 or thereabouts. What's the view on this one, Lancelot?
So I think the outlook is definitely good in terms of the business, for Shakti Pumps and the other pump companies as well, because they are seeing a lot of order inflow. Margins have been good because raw material prices have also come off. So to that extent, yes, profitability has seen an improvement over the last 2 years or so. But given the valuations, the stock, if you look at the last 12 months, it has done phenomenally well. But looking at the valuations, it's factoring in, maybe the next 2 years earnings are already getting factored into the price. So I would actually say that it's better to wait for some kind of correction before looking at entering. Otherwise, you are paying 2 years ahead earnings upfront.
Yeah, that's a fair point. And for a stock that has gained over 500% over the last 12 months, that's certainly a valid argument to make. Sumit Ghosh from Kolkata is asking this next question. He's got Idea Forge technology, which he's bought at an average price of 700 rupees, Rajat. I'm hopeful that you have enough data to give him a 6-month perspective on what to expect on the prices.
What is this stock? Idea Forge?
That's right.
Okay, I got it. It is not a buy-worthy stock from a technical point of view, because although it is forming a base, but then there had been an attempt in the month of June. Throughout June and July, it somehow managed to stay above, and after that, late July, it started falling from 850, and current level is 710. So there is a downtrend. So if it were to fall below, say, something like 675 or so, then one should get out. I don't like this stock from a technical point of view. I have no idea about the fundamentals, but technically it's not looking great.
Yeah, okay, fair point. I'm coming back to you on JM Financial, Rajat, and this is a stock that is currently trading at very close to that 100 rupee mark, and we've got Ravi, who's tuning in from Andhra Pradesh, who's looking for a short-term view. He has bought at levels of 90 and so therefore is making a little bit of money on this trade. He's looking for a short-term view. Should he hold on?
Well, I would say he can hold on. If it is a short-term trade, the stop loss can be placed anywhere below, say, 93. And on the upside, once it crosses 101, 102, this would be a resistance zone. And the next resistance zone would be 105, 105.5. So this is the target that he can think of if it is a short-term trade. Once it gets there, he should book profits.
Okay, Hoodco is the next counter that we're talking about, and it got a lot of focus in the run-up to the budget, of course. So we've got Vishnu, who's bought at levels of 320, and he's got 1,500 shares. He's wondering whether to hold or sell. The stock is currently trading below the buy price at 292. Lancelot, on the fundamentals, would you hold if you bought at levels of 320?
No, I think because fundamentally, the stock is really expensive. So one should look at, maybe booking out profits if one has bought it at a high level, or you have to wait for a serious correction in order to average out if you're really a long-term investor.
Got it. All right. That's the view on Hoodco. Chetan has got a question on IndusInd Bank. Is this the best time to add or buy? IndusInd Bank needs a suggestion, but he's not stipulated whether or not it's a short-term view or a long-term perspective that he's seeking. I will come to you, Rajat, on the charts. For a stock that is trading at very close to 1,340, would you suggest a fresh buy at this point?
Not at all. I would say one should exit because this has already broken down all its support and currently trading around, say, I think 1338 or so. It can go further down. It can test 1280. I would suggest getting out of it. There is no redeeming feature I can see from a technical point of view. And with RBI becoming slightly hawkish, I don't know what is going to happen going forward. Only banking stock that I could see technically still looking better is HDFC Bank.
Okay, so it's a buy call on HDFC Bank. The next question is for you, Lancelot. It's on data patterns, and we've got Mala from Coimbatore, who's bought at levels of 3,406. Should she hold or average for a target of 4,000 rupees? How long should she hold it? And that's quite an upside from this current juncture. Is that something that you can see in the future? Is that close to a one-year target? What are the factors that will have to align for it to hit that 4,000 mark?
So I think data patterns has been rising a lot on the sentiment that is being built in for companies that are focused on defense, and it trades at a very high multiple based off out of its current profits. However, they have been associated with HAL in terms of providing electronics for various jet aircraft orders that HAL may get in the future. And probably that's one of the reasons why there's a significant buying happening, or people are buying into this, anticipating that as and when that order gets hit, They are one of the preferred suppliers to HALs for the various electronics and guidance systems, and that could give them a big order. But these are all things that will happen in the future, and factoring them into the price right now becomes very, very optimistic. So I would suggest that you just wait with what you have, and if there is any serious correction in the stock, then one can look at averaging. Over a longer period of time, you will definitely see good returns from this stock.
Okay. Rajat, last question we're taking, and quick view on a couple of stocks, ITI and Vedanta. We've got Shomi, who's writing in from Kolkata, who's bought ITI at levels of 318 and Vedanta at levels of 460. Would you hold on to both of these, or would you sell?
No, I would say that if you are looking for a short-term trade, then Vedanta can be held at current prices with the stock below, say, 400, and upward expectation could be 450 to about 480. And ITI, I would say one can hold at current prices.
Okay, fair point. Rajat, as well as Lancelot, thanks so much for taking the time, and pleasure having you on the show. And
Most welcome.
Viewers, thank you so much for joining us on this program as well. Hopefully this benefited you. Up next is everything to do with the monetary policies, so do stay tuned.